Hey guys, Mike here. So all I can say is it was another day in the market. Nothing interesting at all when it comes to the indexes, that's for sure. I mean, the small caps finally had a slight pullback, which has been well overdue. And people are like, oh my God, it's going red. It's like, yeah, and I'll show you the charts because this is definitely one of those times where you have to keep perspective, right? You have to pull out, right, and see the forest for the trees, or however the saying goes, okay? And there was some stocks like Tesla. Obviously, it moved down today. We'll talk about that one. There's some other, especially IWM, we're going to do a big view out and say, look, this is what you need to be looking at here, okay? And draw a line in the sand, like here are some levels. If these levels break, it is not good, right? But if they bounces from those levels, it is good. And there's some other data which is surprising to me, which might shock you. I always love finding this kind of data because I'm a big nerd when it comes to this stuff. But when you look, a lot of people, they just can't believe it. And I presented this stuff throughout, but some people just, their heels are dug in. This is the 2-month change of financial conditions index, right? Had its largest move down ever on record, right? This was back in the 70s right here. It actually eclipsed that. And it's basically equated to like 5.5 rate cuts is what it's equal to. And when we talk about this, it might be surprising. I get it because people say, wait a minute, we're rolling off the balance sheet. Like this is the Fed balance sheet. They're rolling it off. And of course, when you look at it as a whole from 2018 to now, you go, they're rolling it off, but it's not a whole lot, right? And again, there's other things that go into financial conditions, right? I always tell everybody this is some update every Wednesday. It comes out every Wednesday. You can look this up. The National Financial Conditions, NFCI, takes in risk, credit, leverage, all of that. And it's loosening. That's just the way it is. I showed you the banks, right? Starting last quarter, they started loosening conditions. Why? Because they're getting money from the Fed. They're saying, here's our bonds, that are way underwater. Give us money, right? So it helps, them be able to put money out there, And so there's all different forms of liquidity and all that good stuff. That's what's happening. What do you see the opposite of, though? Look at the Bank of China. Here's their balance sheet. Oh boy, right? I mean, they just been pumping money like crazy in the system because they have the opposite problem we have, right? They're sitting here, again, their real estate slump is just unbelievable because remember, 70% of their wealth is tied up in real estate. 70% of our wealth, roughly here or there, is tied up in the stock market and bonds, right? But you can see down there at 2022, not good. 2023, not good. I mean, going from 2013 over, really, it hasn't been that great for them or whatever. But this is why they're pumping, trying to get this thing going. And again, it's a drag on their stock market. That and the fact they keep coming out with these crazy policies to keep upsetting people, and it's not very business friendly. So people don't want to put money there because they're scared what the Chinese government's going to do, which we talked about. And we'll look into Bob and some other stocks because they were green today. Now, as I'm sure you have noticed, are we overextended on a lot of things? Yes. RSIs on a lot of stocks. Stocks are up like, good Lord. I mean, the smaller cap, mid caps, 50 to some of them up 500%, right? Your Mag 7, they're kind of sitting there going, they're moving, some of them, but most of them are just consolidating, not really doing a whole lot of anything there. That's why the S&P has not reached all-time highs yet, right? You want to go, well, I don't understand, the Q's got it, but the NASDAQ composite has not right now. The Dow has, okay? And so, but the S&P just keeps hovering right there because if the Mag 7 kicks in, it's going to bring up all-time highs pretty quickly, right? But they have not kicked in yet. Now, going into 2024, and again, maybe tomorrow we hit all-time high in the S&P. We're right there. It won't take much to push it up. So, we'll see. Are they going to wait till 2024 to actually do it in the first week or something like that? So we'll, or again, somebody said, well, how can you call it? I'm not calling it a double top in the S&P. What I'm saying is if it hits up to 2021 highs and then starts to fade back down, you can end up having a double top. I don't know if that's going to happen. I'm just saying, put in the comments you think that's going to happen. When you look how overextended we are in so many different stocks and different like ETFs and things of this nature, have all these stocks in them, you're thinking, are we due for a pullback? And when I say pullback, I don't mean crash. I see people calling for 20% crash. I'm talking about a pullback. And let me show you what I'm talking about. This is why I say this. This is, and just sear this in your brain, take a picture of it, put it in your wallet to carry it around, okay? This is what happens during the S&P 500 on a yearly basis. 3% dips happen 7.3 times a year is the average. So about 7, right? 3% dips. Have around 3.45% corrections, okay? Have at least one 10% correction every year, right? And then these are the big ones, the 15%, less than 1 a year, and then 20%. If you look down the average, you usually get a 15% correction on one every 1.5 years and 20% every 2.7 years. Now, what's important to understand about this, and guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. When you look at it, those are averages, right? What happened? .com happened, right? Bottom in 03, waited until 08, about 5 years later, to drop again. Then we waited almost bottom in 09, 9 years, almost 10, before we went into another 20% correction. But then less than 2 years later, bam, had another one. Then 2 years after that, had another one, right? So we've literally gone through 3 20% corrections in a matter from 2018, October 2018, to the next one started January 2022. Right? And so that's a lot of 20% corrections in a short amount of time. So am I expecting a 3% pullback? Yes. I mean, you can see it. You can go through any chart. You're going to have them. 3 to 5%, 10% is correction. You know, people keep messing up crash and correction. A crash, and I don't even think there's actually a real definition for this. When you think crash, for me, it's 20% or more in the S&P. That's just the way it is, right? Anything beyond that or underneath that, from 0% to 19.9%, is a correction. Are we going to have them this year? Absolutely. Have we had them every single year since the stock market started? Absolutely. Okay, that's what's going to happen. The problem is, when's it going to happen? All right, and again, we're going through this bullish, time of year, going into January, February. It's a presidential election, all this crazy mess, right? But and I was saying in this members video, I was like, man, I look back at all the times we set all-time highs on the S&P, and I just couldn't really find one. I'm sure there's one in there that we were just really overextended. There was just so many stocks were just sitting there in overbought territory. The fear and greed is sitting at like 80 and all this crazy mess. And so that's why I'm saying it's going to be interesting that if we get to the top of the S&P, if we do get all-time highs right there, this is right there, and don't sell off some. That's what we're going to find out. But again, we don't control that, right? We don't have enough money in the market. That's going to be up to the hedge funds and the quant funds and all that fun stuff, right? That's what's going to be up to. Now, looking at IWM, pulling out here, right? What are we doing? Right now, it got above that 50 Fibonacci level, above the 50% retracement from the all-time high. And again, it's kind of consolidating right there. It pulled back to it, held that level so far. And I know for me, I've said it for, God, I feel like 2 weeks now straight, if not longer, that I just really wish that we will pull back down to that trend line. But really, the thing you want to see here is the number one thing to look at is going to be the 200. And I'm going to talk about that, about 200 levels, somewhere in that realm, which is about right there, I guess. So, because if you break 200, that's when people say, well, maybe we're having a reversal here of trend and stuff like that. That could be the case. Again, it's hard to pick out a certain level that really makes too much sense. But you can see, though, there is some bearish RSI divergence there, which is no surprise after a run up like this. And when you look at it, let's count the green weeks. 1, 2, 3, 4, big number 5, 6, and so far 7, unless something happens tomorrow, right? And so that is a lot of green weeks. You can pull back on IWM. You'll be hard pressed to find that happening many times. Okay, I'm just being real about it. And again, it's a rare thing. But right there, this is to make it easier. This is the rut. This is the Russell 2000 small cap. It's a cleaner chart for you. But we have that trend lines coming down right off those peaks right there, and somewhere around that 2,000 mark probably on this one, 200 mark on IWM. I think is what you really want to watch. Probably around the 400 on the Nasdaq 100. So just keep an eye on those levels. Now, Tesla, of course, we talked about yesterday. We had that, fair value gap below it, right? We kept saying, okay, what's going to pull it up? Nah, I couldn't find anything that should pull it up. No RTH gaps, no fair value gaps. So it gaps up above prior day's high, immediately starts to sell down, fills that fair value gap, tries to come back up to prior week's high, bam, gets rejected down again. And so, with this one, as soon as it broke that right there, you knew we were definitely heading down some rough times, right? And so, big sell-off on this one. When we pull it up, though, what do you see above it now? What did it leave behind after all this selling off? Whole lot of, these are 1 hour fair value gaps. You can go to higher time frames if you want to, but I just kind of want to show it. I turned an indicator on so you can see them. And so again, this could help pull it up below if we continue to sell off. When you look to the left, I don't see any RTH gaps, no fair value gaps. I do see that trend line right there it could pull down to. And so let's keep an eye on that one. That looks like it's around like 248 right there, if I'm not mistaken. Maybe it's actually on 249. So let's keep an eye on that one, as it could pull down right there. And if not, though, it does have RTH gaps to pull up. And what happens is usually they'll pull up these RTH gaps. If it cuts through it, that's going to be bullish. But usually they'll have a reaction, right? It'll come up, fill part of it, and then sell back off. And so let's see what happens, because don't forget, we got this coming out this weekend on Sunday. So we got Tesla's Q4 and 2023 delivery numbers will be out Sunday. Analysts expecting, you can see what they're expecting right here. Piper Sandler seems to expect a whole bunch, 507,000 units for Q4. And so this could be a sell the news event if they hit it or not. And so let's keep an eye on this one. Again, a lot of bullish bets on Tesla, though, to continue to go up. Now, Amazon, what's it doing? Consolidating, right? Staying above that trend line right there, right? We consolidated right below that as well before we moved up on this one. And you can see RSI not doing much, right? And again, this is mostly a lot of these large caps right here. You're seeing this happening right now. But when we pull out, again, you're going to see 158. It's going to be brutal to get through, I think, for sure. I expect a rejection on that one if we get there, which I expect us to, by the way. I think this is actually a pretty hot name going into 2024. And then once we're above that, probably going to 166, and then above that, that trend line up there is going to be a major problem. But if we do pull back, when I'm looking at it, again, this is a weekly chart, and this thing's already in overbought territory. But that, ascending trend line is what I'm looking at as support. Breaks through that, you can obviously see July's highs will be your next level if we decide to start pulling back and selling off. Now, AMD had a great day today. And what's great about AMD is the way it's moving. Like, that's the ETA. Just go to regular trading hours. It's just stair-stepping. Like, you don't see any RTH gaps. You got your fair value gaps, right? And it usually comes down and mitigates those, right? And you do have one that's way down there by like 136 and never fill. Doesn't have to fill. But, you would think as much as this moved up, there would just be all these gaps all over the place. But, it's just not one of those kind of stocks that does that. It will usually move in like 1 to 3% increments, and it moves up and down all day. So it mitigates any kind of gaps it was going to leave behind. But when you look over here, setting at 149, I think was the high for the day. 151 will be its next resistance. Above that, once you get above 151, then you're heading up to the next level right there. It's going to be around 157. And then there's that trend line. All-time highs. So, AMD looking good while NVIDIA stalls out. A lot of these semiconductors are looking really good while NVIDIA stalls out right now. Right? Now, this is a funny one. I found this today, and this is crazy. Look at this very carefully. This is the number of analysts with buy ratings on shares of Meta and how much they rose, right? They started in the end of 2022, and then look at how much they rose. Now look at the chart. It's identical. Look at this. You want to talk about manipulation? That is pure way to manipulate a stock up. And what are they doing right now? They're giving it price upgrades again, right? And so what's it doing? It's starting to move back up. So this one loves the price upgrades. Most stocks do, but that's so hilarious to me of how those two charts are almost completely identical in the way this stock moved up. And so, like I said, I'll be shocked if they try to rob this thing of all-time highs, and it's only about 6.5% away right now. But yeah, that's what big money does. That's what they all do. These rating agencies, everything else. Remember, they own the stock, and yet they're giving it price upgrades. No conflict of interest there. And you can see, what is that? It's an RTH gap and a fair value gap to suck it up and try to get it to fill those, right? And so I expect some pullbacks along the way, but I expect all-time highs within the next month or two for sure. Now, BABA's hilarious to me. And again, this is an ADR, right? So you see all the gaps, and somebody asked me this, said, you never mentioned the gaps on BABA. Well, I have in the past, and they're useless because all it does is gap, right? And so I don't find RTH gaps. I don't find fair value. I don't find any of that stuff to help me chart a Chinese stock. I just don't. Because again, they're ADR and they seem to be different, right? And even when you look at the moving averages, I'm like going, well, it just slices right through them, and you kind of look at it. So trend lines tend to help. I see that one. Find the supply zone if you can. But again, it's fixing to run in this 50 right here, starting around like $78 right there. So expect that to be resistance and get through that. Again, I think 83.75 is a good target as long as the Chinese government plays ball. Now, as far as economic data, the only thing you got to worry about in the morning is Chicago PMI right there. And that's about it as far as economic data. So nothing that should really affect markets or anything like that for sure. I mean, if they're going to sell it off, they're going to sell it off. But I assume volume is going to be pretty low tomorrow for sure. And so again, we'll see what happens next week, starting the new year and everything. Let me know in the comments what your prediction is on that one. Again, I'll do a video tomorrow. I'll do your questions on Saturday, so put them in the comments if you want any questions to answer and stuff. I hadn't decided if I'm going to do a Sunday video or not. I'll figure that one out. So anyway, hope you guys got something out of it. Hit the like and subscribe button, and I'll see you tomorrow.